In this video, I'm going to give you, excuse me, I'm going to give you some examples of red peaks and show you how some work and some don't, and the evidence that supports why one works and why one doesn't, because it's all in the sensitive indicators. It's absolutely amazing. On the charts, I have three red peaks right down here in the middle. First of all, I'm in AMSC, and I'm in February of 2017. I encourage you to go to that site on your own platform and look at what you can see, because sometimes videos are not real clear. Also, the other thing is, click the full screen mode. That will enlarge the screen capture. But again, the basic definition for a red peak is zip red over 50 and zip yellow under 50, both of them going up. The red peaks and the red bottoms are again reversal patterns, and a red peak will go down and a red spike will go up. And so when we look at these here, for example, when we look, I'm basically looking at these three that are right in here. And I'm going to pull the yellow line over to the first one. On the yellow vertical line, we have a red peak that is not very high. That one happens to be the zip red is at 65. And keep in mind, zip red is a real fast moving line. So if something is preventing that from going real high, there are forces that are just stopping it. So that tells you that something is there. We always can't determine what force it is or the type of force it is, but we can see the results with the sensitive indicators. And so next day that one goes down. Now, in this example, you don't see it too often, but in this example, zip yellow is actually going down, but it is under 50. And so it's not, the requirement is with zip yellow and zip blue, or I shouldn't say requirement, in a way they're position indicators. You can see between the red vertical line and the green vertical line, the price drops significantly. The yellow line stays down low all the time, with the exception of this little green line or pop-up here that we had right in this area. The blue went significantly higher, but then again came down. Zip green hit 100 at that point, but that's a pinpoint zip green, we call it. Okay, now the same thing is true with the next one. Look at the next day after look at the red candle after the yellow vertical line. I mean, that's a lot of power to know that tomorrow you're going to have a red candle. I mean, you can trade that very effectively. I mean, and again, your candle, understand candle theory. A red candle typically opens and goes up, creating a small upper tail, sometimes a large upper tail, and then it goes down all day long, it hits a bottom somewhere, and then it comes up before the end of the day. So you have upper and lower tails on every candle. And obviously that's not always true. Sometimes you have flat bottom candles. But that generally speaking, a red candle opens, goes up, and then goes down all day. A green candle will typically open and go down and come up all day. That information should be locked away in there. and identify. When you're looking at an open and you're seeing what's happening, you're anticipating a red candle. It should open and go up a little. And as soon as it hits the top, hit that short button because it's going down. This third one, I'm moving the yellow vertical line over to this third one. The same thing is true there. There's a large red candle after that, and you have a red peak. You have a low yellow, zip yellow line, and zip red is at 56. So again, you know that things are, in this particular case, are going to go down the next day. Now, go over to the green line. We have a red peak. Why isn't this one working? You have zip red at 84 and zip yellow is at 14, and both of them are going up. This should be a red peak, reversal pattern going down. It does not. Why does this happen? Okay, take a look at the evidence and see what you have. On going this green line over here on this chart, I'm going to go to 2 days before it. You see my white line right now on the left chart. And 2 days before that, we had a trend red and green going down. The day before the green vertical line on the left chart, we have trend red in a low angle down. And what is the definition of a low angle down when especially when trend red is the lowest? It's obviously a reversal pattern and it goes up. And so prior to this green vertical line that we have a red peak, we have a trend red going up and telling us that the market is moving up. And again, if you're not familiar with it, you may have heard me say it on other videos, we watch trend red and green immediately out of the chute first. Those are your price direction indicators that will tell you a whole lot. They've got more impact, I'll say, is it might be a way to describe it. And so the day before this green line, we have that situation. I'll move the yellow line over to there. The day before, on that yellow line is the day that we have a signal that things are going up. And in fact, they do go up, but just barely. On the green line vertical day, on the vertical green line day, we have a green candle with just a monster lower tail in relation to the candle itself. I mean, it looks like it's 3, maybe 4 times longer than the body. And so that oftentimes is an indication that will tell us that that something is going up. But that is not by definition, we can't assume that for sure. Okay, we can only look at the evidence of what we have. But what do we have? Again, the day before, we have a very strong indicator, and I'll put the yellow vertical line on the day before on this chart. This is the zip chart again, and what do we have here? We have a pink-green bottom. We have the zip green at 0, and looking over at the data window, zip yellow is at 387, zip pink is at 387, green of course is at 0, blue is at 4, gray is at 8, red is at 10, and Zion is at 45. And so what do we have? Everything is going down. Zip pink is tied with zip yellow at the bottom, and when they're equal, either one can qualify for going up. Again, you just need to be close, but the vast majority of the time, zip pink is going to be next to green. It's going to be the lowest next to green, and that's the signal, especially when it comes out from from behind other lines, and it's the lowest, and that's the signal that it's going to go up. You'll see this in pink-green tops, and you'll see this in pink-green bottoms. It's the same principle. When the pink pops out, that's the signal for the change. And so the day after the day after the yellow vertical line is the green vertical line, and the green vertical line is theoretically our red top, but we've got so much information. You can go over to the price chart and look, and you can see that we were at the bottom on the yellow vertical line. In this particular case, the price red was at 5.3, blue is at 7, and green is at 14. When red goes under, that's typically an upturn, especially when you come off of a high peak like this. You look for turnarounds. For example, take right over here the yellow vertical line is on a red peak right now, and you have a red candle up right in here, right next to the white line is the 100 moving average. The white long dash line is the 100 moving average. It spiked, it gapped way up, it went way up. Look at how far the tail went above the yellow dash line, and it stopped right there. That's real indicative of going down next day. This when you get down here, 2 days later, right here, you have two strong red candles, and you have a real long red trend red line. Those long red lines are what is great to find those, because they're indicative of reaction causing a strong upturn. Now, obviously, the next 3 days did not go up as strong as the 2 days of the two red candle days, but again, everything is indicative. All your lines are going down, so everything is telling us that back here in January we were starting into a downtrend. So looking at the lines helps us. I hope that clears up some of the issues. One other key factor I'll point out that you may not have seen, over here on the zip chart and the power chart, you have the yellow vertical line 2 days before the green vertical line, and you have a power red BOC, but what do you have? It's a BOC higher. The right leg is much higher. And again, if you've heard me talk about BOC patterns, a BOC higher versus a BOC lower, you know that the BOC higher pattern is a much stronger signal that an uptrend is coming. And so that point right there has a lot of power in telling you that you're going into an uptrend. I mean, you're bouncing off of a green pink bottom that are oftentimes trends that will go up. I mean, just as an example, let me move this red line over here. Here's a pink-green pattern, a pink-green bottom. But in this particular case, where this red line is, you have it tells us that it's going to go up because we have a red spike. In this case, the zip red happens to be at 37. The general rule is that you want to have red above 35 and yellow under it for a spike up. You like to see red above 50, but you don't always see that. And this one is in the opposite format of what we would normally see of a red pattern, but the yellow is continuing low, and that's why I'm bringing it out. I hope that wasn't too confusing, but the point I'm trying to make is that on this red vertical line, your zip red is 37.04, and your zip yellow is 12, and your zip pink is 11.9. And so zip pink is the lowest. And so again, it tells you it's going up. But, and it does in theory go, it gaps up, it looks like a few pennies, but it's nothing serious. And that's because we're in, yellow is staying down low, and we know when zip yellow stays down low, that prices continue to go down. And we're obviously been in a downtrend for several, who knows how long, I don't know what the length of time here is, but anyway, this red vertical line, it has the trigger of the pink being lowest, but there isn't any power to it. And so you get one green candle the next day, and then it continues in the downtrend. And so look at the evidence of what you have on these red spikes. If you put them together, you will see the particular driving force behind what's moving things, because some indicators are indicative of what's going to happen the next day, and some indicators represent an uptrend. Because when I say next day up, it's a 1-day move, and when I say uptrend, it's for a 2 to 5 day move. So that is red peaks. I've done I get excited about red peaks and red spikes, and for some it can be confusing when you first look at it, but I've made several videos on red peaks and red spikes. So again, for clarification purposes, I wanted to point out what red peaks and red spikes are about. Hope you understood what I was talking about. Whatever you do, have fun trading.